All right, guys and gals, welcome back to work here this evening, Wednesday evening, October 28th, 2020. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the E-minis, got the crude oil, and of course, we got the gold, the yellow metal on our radar for tomorrow. Boy, where do I begin? So much to cover in tonight's video. Big bloodbath moves in the markets today. A complete collapse across the board today. Lots of ranges, spike in channels. I'll tell you, a pretty simple plan for tomorrow, but momentum is going to sneak in here, and that's the biggest trick for tomorrow. I want to make sure you guys are ready and prepared for all the different types of setups we're seeing for tomorrow. Before we jump in, though, and get this video going, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you don't miss every evening's newsletter. And then don't forget, if you have any questions for me, drop those questions in the comments section. I'll get them answered as soon as we finish up here this evening. And as always, I really appreciate you guys tuning in every evening. If you enjoyed this video as much as I enjoy making it for you guys every evening, always appreciate you guys hitting that thumbs up button for us here on the YouTube channel. So please make sure you subscribe, that way you don't miss all the good stuff. Drop those questions in the comments section below, and thumbs up if you guys value this content we publish every evening on this nightly newsletter. But enough of the introduction. Time is ticking. The clock says I'm a little bit behind schedule, so let's jump right in. Charts are looking all bearish, right, for tomorrow. I don't think there's a lot of confusion on this for tomorrow, right? Or as far as what happened today, right? Markets across the board, we see big drops across the board, right? S&P collapses, crude oil collapses, right? Gold collapses. One of the biggest drops we've seen since June this year, I believe. So, we're bearish across the board right now, but you'll notice, right? There are ranges, right? There are ranges. Gold's got a range, right? Oil's got a range. E-mini, S&P here has a range. Now, those ranges are really important because what they do is they create this kind of whip effect, right? These pendulum swings. And so, the strategy across the board is pretty simple, right? We're looking to sell pops. Right, looking to sell pops right across the board. Sell pops on the S&P, sell pops on oil, right, and sell the pops on the gold. But those ranges, don't let those cute little rectangles fool you. They pack there's a very important clue right hidden inside of there, because as this thing rotates, this is where things could get interesting. We may be able to see some short covering rallies tomorrow. Tomorrow could easily turn into a very bullish day if the bears can't keep a lid on this. So I'm looking to sell pops across pretty much all of these. Got a lot of resistance levels I'm watching overhead. We're going to dive into each of these charts here, though, in just a second. Before I do that, though, let's make sure we know the schedule for tomorrow, right? Tomorrow, don't forget, we're going into the last couple drops of the month of October. So we know the last few days of October, as we go into the end of any month, we expect to see volatility increase, right? So be aware of that. Volatility levels will pick up these next two trading days, Thursday and Friday. Now, again, right, as I mentioned earlier this week, we also have an election next Tuesday. I'm not sure if you knew that or not. I'm sure most of us do, right? But we have an election next Tuesday, which is definitely going to contribute to a little bit of this volatility over the next couple days here. So end of month volatility, election next week. And speaking of next week, please don't forget, if you're outside the U.S. or if you're living under a rock here in the U.S., Saturday evening, Sunday morning is daylight savings time, right? So we fall back this time of the year 1 hour. For most of us in the U.S., that will apply. If you're outside the United States, just be aware of that. When we come back next week, we will be technically 1 hour earlier, right? Because we'll fall back here. So please make sure you adjust your clocks for Eastern Standard Time as daylight savings time comes to an end. One more thing we saw hit our radar today was Hurricane Zeta. I love that name, Hurricane Zeta. Will it affect crude oil for tomorrow? It's tough to tell. We've seen a couple hurricanes come and go just in the last few weeks, and they really haven't done much to get oil off of their lows. Big drop down on oil. I'm definitely curious to see how much this hurricane, if anything, we get any reaction to it. So, combine a big move down today on oil with the hurricane, hitting Texas, Louisiana area there, right? That definitely could shake things up for the buyers on oil. We'll wait and see what happens tomorrow. But that is something we're watching for here as we go into the rest of the week. So volatility is definitely on our radar here. Now, looking deeper at the schedule for tomorrow. Now, tomorrow's probably the busiest news day of the week. Don't forget, in the pre-market tomorrow, and before the opening bell and after the opening bell, after the closing bell tomorrow, you've got earnings tomorrow. Tomorrow is known in the kind of the industry as kind of Tech Thursday, which means it's when you're going to see a lot of the the FANG stocks, right, are going to be reporting earnings before the open and after the close. Now, we're going to cover the S&P tonight on this video, right? But if you're a NASDAQ trader, be aware of that, right? Be aware of that. NASDAQ will be a little squirrely, and obviously the pre-market and the Asian session tonight, and of course the post-market for tomorrow. So be aware of that for tomorrow. Then, as we go into the U.S. session tomorrow, don't forget the ECB announcement. Boy, what a big announcement tomorrow! Now we're just hearing about now new fresh lockdowns for pretty much the entire month of November in France, right? In Germany. I'm not sure if they've instituted that in the UK yet, but bottom line is the ECB meeting is tomorrow, the announcement is tomorrow, and what that means is if you're trading the European session, that announcement comes late in the afternoon if you're in Europe, right? I believe it's mid-afternoon in Europe, right? It's early morning here in the US. What that means to us tomorrow in our trade room is you got to be thinking about gold, you got to be thinking about the euro and any other markets, right, that are affecting that. You guys would know better, of course, right, in Europe if you're in Europe. But again, in the U.S. session, though, be aware that ECB, that's the tail end of that ECB will kind of impact the beginning. Usually it's till about 9:30, 9:45. So careful on the gold tomorrow, especially if they say anything that surprises people tomorrow morning. So it could be a bit of a squirrely morning tomorrow morning, because of the ECB announcement and again, right, the earnings. It'll be interesting to see what the ECB says tomorrow, though, in the wake of these fresh lockdowns being installed here in various places in Europe. And of course, if you're being affected by this stuff right now, man, stay strong out there. This is definitely not an easy time to be in these countries. So my heart goes out to everybody being affected by this stuff. So those are the big kind of headlines, the big ideas, or the big aspects of tomorrow. And then we go to the U.S. session, right? That isn't even talking about the news yet. As far as the U.S. session goes tomorrow, we get some big news tomorrow, right? GDP at 8:30, jobless claims at 8:30. Now, that GDP number has been put on a pedestal. This is supposed to be the biggest GDP ever, right? Now, we know people like to inflate these things, but this is supposed to be a pretty big number tomorrow. Now, why is it important? Well, because if it doesn't end up being that big of a number, you know what's going to happen, right? There'll be some great reaction trades to the market kind of going, wait a second, you said 35% GDP growth. Really, that's what they're calling for, right? It's between 33 and 36, I think, tomorrow. Look for that number to miss. If it misses big time, that will definitely be something that traders will take advantage of here for tomorrow. And of course, jobless claims, right? I mean, jobless claims have been everyone's radar. So I'll tell you right now, tomorrow morning, early in the session, you definitely don't want to miss the opening bell tomorrow. 8:30 GDP, jobless claims at 8:30. This could be a firecracker, especially after the big bloodbath that we saw today. So very curious to see how the reaction comes tomorrow. Now, obviously, we're not going to trade the news, right? We're not gambling like that. But I will be watching for setups in the wake, right? 8:40, 8:45, and hopefully we can get, right? Maybe I said before, maybe a possible short covering rally if we get some good news out of those numbers here tomorrow. I doubt that home sales number is going to mean very much to us. We've seen some pretty good home sales numbers already, and natural gas, of course, at 10:30. So again, early morning tomorrow. Careful about the ECB. 8:30 Eastern Time, GDP and jobless claims. We'll be right there watching that news number comes out. I'd love to have you there, right there with me. Tomorrow morning, we open up our trade room at 8 o'clock Eastern Time. What I'll do is I'll put the link for you guys to join up for tomorrow morning in every morning's trade room. I'll put a link for you guys in the description of this YouTube video. If you're on the blog right now at Sideways Markets, I'll put a big button for you below this video tonight, right? So if you're on the blog, hit that button. Come out and join us every morning, 8 o'clock Eastern time. And again, don't forget, next week, right, will be 1 hour, will fall back, right, because of daylight savings time over the weekend, or daylight savings time coming to an end. All right, we're looking good there. We'll talk about Friday's plan, Friday's news plan in tomorrow night's newsletter. Let's get into the charts here once again. So big moves down today. We're looking to sell these pops, right? Looking to sell the pops, but those trading ranges, they really are the big variable here as we go. Let's jump first into the E-mini S&P here. Now, boy, I was joking around with you guys in the trading this morning. I was expecting this market to go lower today, but I wasn't expecting this big of a bloodbath. Obviously, this market really escalated this morning once we were pretty much sitting just below those lows at 56 this morning, right? When of course they talked about the release or the leak of the new lockdowns, right, coming in Europe, and you can tell that just set off everything here this morning. Interesting to see gold went lower with it, right? So it's obviously a kind of a de-escalation, or people just simply removing some of the risk off their balance sheets. What's the key takeaway here on the S&P? And this is going to be consistent pretty much across the board tonight. The key takeaway is it's a very strong move down, where you can easily see two big legs, right, as we go lower. The bears have control, right? The bears have control. You want to be a seller, and anytime you see a big move like this in one day, you're probably looking at a range the following day. We talked about this on Monday night, right? If you go back and watch Monday night's newsletter, you see the same thing, right? With that big bloodbath on Monday, we get the sideways day the following day. The big thing to remember is anytime we see this much movement, the market kind of has to catch its breath. Now, like I said earlier, right, if the sellers better hold this thing, because with some big news tomorrow, some earnings reports tomorrow, there's potential for a reversal. But boy, we are definitely a ways away from a short covering rally, short squeeze here, right, on these markets. So bear market into basically a trading range, completely what you'd expect. And of course, anytime you have a trading range with a bear market, what's the plan? The plan is to sell above the range, right? And look for resistance levels to get short above the range. What is also a really interesting clue on this is it's also a spike in channel. You'll notice that channel rotation is really, really nice. And this might be, honestly, one of the most important clues, because if you watch this YouTube channel a lot, or if you're a client of mine, you know spike in channels are really one of the top 5 chart patterns that you want to learn, because they're so consistent. Consistent why? Consistent in the fact that they almost always pull back to the base of the channel. So right where that spike kind of hits that channel high right there, that area right there. So kind of interesting, right, how that channel puts us now right up around, what is that, 33.10 area up top there? Okay, so those are kind of the big, those are the 3 big components. Big move down. We know we're bearish. We want to sell at resistance levels in a bear market. I've got a range that I want to sell above the range. I have a spike in channel that tells me to sell the base of that channel. All right, so we're all on the same page now. So now, how do we structure, right? How do we structure these short trades? This is the tricky part for tomorrow. This little range, and this is pretty much consistent across the board here. This range is very, very important, because what is a trading range? A trading range is a balanced area on the chart. It's basically where buyers and sellers agree on value, right? The buyers buy it up when it goes lower. The sellers sell it higher, right, when it goes above. And this is kind of where they meet on value, right? The buyers and sellers have negotiated, and this is what they've come to, right? This is their conclusion, right? The current value, with everything they know at this point, right? Remember, this is, the markets are always right? They're processing all this information. Everything they know at this point right now, the value is right about that, 86 to 78, right? If this was a used car, right? If it was a used car, the sticker price will be between 3,200 and 3,278, right, on the lot. Right? That's kind of how this whole thing works. So a range-bound market is a balanced market. Think of this, right, balanced, and now imagine momentum. So market's balanced, right? Imagine now we break below that range, And when it comes back above, what's going to happen is the momentum now will swing back in the other direction. We call this a pendulum swing. This is where, again, the plan is relatively simple. Sell resistance above the range. What is not going to be so simple here, and this is what I want to try to make sure you guys don't fall for these kind of head fakes and traps for tomorrow, is that if this market runs straight back up here, this is going to be a steamroller. And so in these situations, you want to use these what I call nested failure patterns to let the buyers try a couple times and then sell it back down. So you're going to see a lot of this, right? This is pretty much the same thing for all of them. Gold is even more important for tomorrow. We'll get to that here in a second. So the range, right? The range is a balance area. The range is a magnet. I don't want to trade inside the range. I'm going to trade resistance levels up above the range. My question right now is do we go straight up into that area? Because if that's the case, we have a lot of momentum. And if we do have all that momentum going higher, right, I don't want to step in front of that freight train. I'm going to let the buyers do it for me. Let them try once. Let them try twice. And once I've got those buyers trying a couple times, this will usually go just below the moving average, right? It'll usually be, every pullback's different, but usually it'll be, right, the first one will be the EMA, the second one will come just below it, right? And that's where you start to get the good stuff. Now the buyers are fully committed. Remember, there's a lot of momentum coming off of this low right now. So we need something to counteract that momentum. Yes, I do realize there'll be a lot of bears up here. They'll be trying to sell. But momentum will be too strong just to sell into it. It'll be difficult to pick a top, if you will, right? Because it may go up, get you in, stop you out. Get you in, stop you out. Get you in, right? It's difficult to pick those tops when a market really rallies higher like that, okay? So I try not to pick those tops. What I'll do is I make it easier on myself and everybody in the trade room. We'll wait for those buyers to try once, try twice, and then we can sell into those stops from there, right? It's a lot less stressful. It's a whole hell of a lot more reliable. I call them nested failure patterns. Now, we can remedy that momentum problem, right? That's what it is, right? We're looking to sell at resistance. We can remedy that momentum problem if, for example, the market was to, let's say, sit sideways for a while. Right? If we sit sideways for a while and that momentum kind of chills out a little bit, you know what I mean? Now when I get that run higher, now the market isn't just steamrolling higher now, and now I can be a more aggressive enter, right? I can be more aggressive seller. I can now look for buyers, right, to try to commit, and I can now look for shorts into their stop losses. So that's really kind of the foundation of what the plan is going to be looking like here for tomorrow. Now, what is interesting about this S&P here is there's a couple variations of this. So again, the first one is if this market just runs, right, and cranks all the way through these highs here right now, as I mentioned before, I'm looking for what I call a nested, a one try, a two try, and what I'll typically do is I'll draw a trend line off those highs and look for that short, right, off that trend line. Other variations would be if it comes one and then two, you know what I mean? In those situations, you don't want to get too aggressive selling low because now you're defeating the purpose, right? Remember, the goal is to sell up top. So if the nested failure looks like this, what you want to try to do is grab a trap off that high, right? Or at least get up into that high up there. Does that make sense? Right? Does that make sense, right? I want to sell really high. So don't get so locked in on, making sure the buyers try once, buyers try twice, that you end up taking that trade down here. What'll happen is it'll run lower, it'll kick you out, and you'll see all professionals waiting up there. So there's a little bit of nuance to that, and obviously we'll go over that together tomorrow in our trade room. And again, if we sit here and go sideways for a while, right, then we get that pop higher. Now, again, remember, just because we go back into the range doesn't mean we can't really launch, right? I mean, let's say, for example, this market really pops, right? It could easily pop right up. Trend line overhead, reversal line up there. It wouldn't surprise me. But that's an example where now that momentum becomes a big problem, right? That would be an example of where 1, 2, right? Draw a trend line here off that high, right? Short back down from there, right? Does that make sense? Momentum's this is the biggest wild card for tomorrow. Or we go sideways sideways, we pop up, right? Nothing too special. Buyers come in, they try to buy the pullback. I'm at the base of the channel, right? I'm at resistance above the range. Now we know exactly where their stops are, and we can sell right into those stop losses going back down again. So like I said, don't let that range fool you. It's a cute little range, right? But it's a powerful clue that really tells us be very careful with how this market whips around here. Now, guys, we've talked a lot about these failures and momentum, right? More specifically, how we use the moving average, right? You know, I cover all these details and a lot more in our free trading classes here at School of Trade. You know, if you're not a member yet, you got to grab the free course, because that way you can learn all these patterns and see. I'll give you lots of examples of how we apply these patterns on our favorite futures markets. If you're serious about your trading, grab that pop-up there in the upper right-hand corner and get registered as a new member of the free trading course. That way, the next time I say, watch out for the pendulum swing and momentum, you'll know exactly how I calculate all that, and you'll be able to make the most of our time together right on this video. Well, a couple more things here too. The spike in channel. Oh, sorry about that. The spike in channel. Right? Spike in channel. This is a big part of it too. We may only get a shallow pullback. So what if all we do is pull back off the high and come back down again? Can I short that too? I can, but the problem is the range, right? So what's the best way to avoid selling too aggressively in that range? Look for a trap. So a shallow pullback, 1 try for the bulls, 2 try for the bulls. So think of a shallow pullback. I don't want to sell inside that range, so I'm trying to get short above that high. This is definitely going to be the most aggressive trade you could probably look for, right? It's off the top of that channel, which is fine if the range wasn't there. But because the range is there, we have to assume that traders are going to kick back against shorts inside that range. Look for traps, right? If we don't see that deep pullback, right? So big nested failures, if it really crushes off this low, right? Again, the trap if all we get is a shallow pullback. Now again, if we sit sideways inside the range, what do we do with the range if we go sideways? Look to keep fading breakouts, right? Wait for that price to pop up, wait for those buyers to try and fail, and we'll sell back down right from there. What if it goes lower? Right? Can we sell it as it goes lower? Well, before we do anything, where are we trying to go? Now you'll notice I've taken the range and I've used the size of that range to find my resistance zone and my buy zone. I'm not just guessing on those levels. Believe it or not, if you actually take this trading range, right, and copy and paste it up, right, copy and paste it down, those levels are there. So think of this area as a kind of a magnetic field. We have to get through this area here, okay? So that's the first thing. Where are we trying to go? There's another level down below us at 3198. We'll call it 3200. Right? So if the market does want to take one more leg lower, that's where we're trying to go. Now, how would I trade it going lower? What I would need to get is one of two scenarios. I'd have to see another very strong leg down, right? Really blowing right through this battle zone. And if that's the case, I can mark up that low, I can mark up that high, and I can look for a short off the high of that channel. What you want to think about, though, is you want the first test of the high of that channel. First test is the best test on these what we call 1, 2, 3 breakout patterns. What is more likely, honestly, for tomorrow is it's more likely you go strong move down, pull back to the moving average, and a jump off that moving average there. That's more likely for tomorrow. In that case, what I'll be doing is I'll be trying to find lows to bring up to those highs here and look for those hidden channels above the highs here. Right? The key is just don't chase it as it goes lower, right? Wait for that pullback, find your channel. It's highly unlikely we see much more than a sideways moving day tomorrow, right? The idea we're going to go one more big leg down is it's not very likely. It's possible, but it's not very likely, right? The market will likely trade sideways tomorrow. My job is to make sure I sell above those highs using the strategy we've talked about already. Now, what about a short covering rally? Right? What if the buyers go, buy the dip, dude? What if the buyers come in and really take control of this thing? How would they take control of it? Well, I've already explained, right, how this pendulum swing works, right? So there's definitely potential, right? If this is seen as an exhaustive move, the market could easily jump up. Now, what do we need to call it a reversal? Because so far, all I've talked about is selling off that high, right? Either with a nested failure or a straight up failure pattern. If the buyers can hold that pullback and jump, right? In other words, if they can get a strong move up, hold the pullback and go. If they can get a strong move up, hold the pullback and go, good. Now we're bullish. But I'm not going to try to pick a bottom on this right now. Well, you can. We'll talk about that in a second, though, right? I'll show you guys how to pick a bottom on this in a moment. If we do see a strong move up, though, right, a pullback to the moving average and a jump off the moving average, okay, this is where it doesn't really matter the strength of the first leg. The first leg is not the most important part, right? The most important part is how the market responds when they launch, right, off the moving average. Because the launch off the moving average, that is the sign the bears are no longer here, right? Because if it doesn't, it's going to come back, pull back, it will fall flat on its face again. So if the buyers can take this and run with it, good. Mark up that high, mark up that low, and remember, the first test is the best test that you want on that, right? First test is the best test on that 1, 2, 3 reversal pattern. 1, 2, 3. Strong jump up, pull back to the moving average, jump off the moving average, right? That's going to be your 1, 2, 3 reversal. I would also keep an eye tomorrow if the market does go sideways for a considerable amount of time tomorrow. If we do end up kind of getting stuck inside this range here, right? Look for those crown reversals off the low. If I can get down and take out that low, nope, not that low, Joe. If I can get down and take out that low, right? And then as we pull back, the bears try once, the bears try twice. Again, draw a trend line off that low, look for a trap below that low, right? Buy at support. That is a valid long setup. Now, obviously, that's not going to be as high probability as a reversal pattern, 1, 2 reversal, right? But if you got some experience, if you got a relative high level of risk tolerance, that's a good looking setup as we come off the low. You'll see an example of this right on the gold, I believe, tonight. So again, it's kind of a nested failure. I call them crown reversals in this right context. All right, guys, so I think we got a pretty good plan for tomorrow. The big thing right now, though, is don't just go and buy this market right now, because this could easily go sideways here tomorrow and really kind of ruin the rest, right, of your evening. So careful on momentum, right? Careful on momentum. And again, if you want more details, grab that free trading course. I talk about all these patterns in that free trading class. All right, let's keep going here. So the S&P is kind of the template, right, for everything we're talking about here tonight. Let's grab some oil. Oil, and again, we're going to sound a bit like a broken record here right now, but it's kind of this, again, everything pretty much the same thing. What's the big takeaway on oil right now? Very bearish, right? 2 legs down. We know we're bearish. In a bear market, right, we sell at resistance. Okay, where's the best place to get short in this environment? Well, you've got your trading range. Okay, there's your trading range. You've got your pendulum swing. Correct? Got your pendulum swing. So we know this area up overhead. Remember, in a bear market that goes sideways, you want to sell above the range. Here's the most important part, at resistance levels. Okay, bear market into a range, sell above the range at key levels of resistance. Now you'll notice there's also a spike and channel on here, right? Spike down, channel out. Very good looking, right? Spike. Oh, sorry. Very good looking spike and channel, right? It's a handsome guy. There's the base of that channel. Okay, so that gives you an idea of kind of where we're looking for, right, up around tomorrow. I really like this trend line too. I like this trend line, base of the channel, right? Again, I'm using the size of this range to find my levels. Okay, so We've covered the overall idea, right? You can see it already here on oil. We're rotating off the low. Okay, this is in my trade room tomorrow morning. You're going to hear me say we're rotating off the low. It's important that you remember, and I talk about this a lot in our trade room. There's a very big difference between selling above the range like this, right, and selling above the range like this. And you can see it. It's very different, right? It's very different. Those are two very different situations. Why? Because one of them is kind of slingshotting right off of that low. And this is why I said earlier, it's important to remember, what is a range? It's a balanced market. It's not just a rectangle, right? This is a balanced market here. When the price falls out of balance, right? People aggressively buy it up and it swings higher, right? If I use that used car example, right? If a $5,000 car gets discounted to $2,000, what's going to happen? Right? They're going to buy them all up. And what's going to happen? The price will aggressively go higher to meet all the demand. You can really break that down as many times as you want like that. But that's the key. The key is we're rotating off the low right now. And so as we go higher, there's a lot more momentum in play, right? Because of that, we want to let them try a couple times, right? Don't just step right in front of that freight train. I can be pretty aggressive, selling straight above the range, right? Because I know the range is a magnet, right? But I can't be so aggressive on this example over on the right-hand side. So that's, again, this is a very important part of this. So we measure our pendulum swings. It puts us all in the right spot here. Do we go sideways for a while tomorrow, right? If that's the case, get me up into resistance, get those buyers to try and fail, and we can sell it right back down to that range again, right? But do we just run? Right? Do we just run through those highs? You see that? Look at that chart now, right? If the market really takes off to the upside like that, is that it's still a bear market still, right? Because in order for this to be a bull market, what has to happen? They have to hold that pullback and go, right? So if they can get a 1, 2, 3, I don't count this, guys, as a 1, 2, 3. Remember, the range is a magnet. Show me you've got the guts. Show me you've got the cojones to hold that pullback and go, right? Because then I can trust it. Then I can mark up that low, that high, mark up that low, and I can buy off of that low, right? Again, first test is the best test. So if we sit and chop sideways for a while tomorrow, then we pop up into resistance, yeah, I can be a lot more aggressive on that. Wait for the buyers to commit, find those stop losses, and short into those stop losses, right? Buyer failure pattern. If the market just simply rolls higher here, now what's the problem? Momentum. So let them try once, right? Let them try twice. And again, remember, these nested failures, there's some nuance to it, right? I want to sell at resistance. I don't want to sell low. I want to sell as high as I can. So buyers try once, buyers try twice, right? And we're shorting above at resistance. Remember the variable that I mentioned earlier, right? Sometimes what will happen is the market will go like this, right? And come back like that. And that's one try, two try, right? That's one try, two try. But are you going to really sell right there? That's where it gets tricky. You can't just stare at the tree. You got to see the tree inside the forest, right? As they say. In those situations, use those tops, right? Use those traps. It's still one try, two try. But again, we're avoiding selling right inside of that range. So strong move down into a range, sell above the range, right? But again, careful as the market whips back in the other direction. And if it really starts to run here, if it really jumps up, and the buyers really have what it takes, again, we got Hurricane Zeta, right, coming to the southeast of the U.S. right now. Again, not a very likely scenario where it makes a big splash. If I can kind of use a metaphor that rings a bell for that. It hasn't affected us lately, but if it does and market really runs like that, or if the buyers come in and see all this as a big bargain opportunity, right, mark up that high. Mark up that low. Unfortunately, I'm not in the business of buying that first pullback. It's not a reliable entry, right? You want something higher probability, and the higher probability is off the low. Again, first test is the best test. Where would those buyers try to go? They're going to try to go back to where they came from, right? They'll try to go back to, first of all, where they came from today, 39. And of course, there's that lonely weekend gap, right? That lonely weekend gap. What do you think the odds are? What do you think? Over, under, right? What do you think the odds are, right? We get that weekend gap here at some point this week. It'd be a pretty impressive recovery, that's for sure. And the horrible irony of oil right now is just 2 days ago, we heard the Saudi oil minister saying the worst is over. It's like, oh my goodness, like buying the top of the tech bubble right back in the 90s. It's almost comical how right as he said that, oil just took a bath. Anyways, so that's the plan, right, for the upside here on oil. And we know, of course, if we go lower, we got to break down this area. Now, it's very important we see 36.92, 36.67. These are some big lows way back there. Now, think of this, right, like a buy zone, right, like a support zone here. So if I break down this low here right now, right, if I break down to that low, I can look to buy off of this low if I can get that 1, right? That 2. Remember that from earlier, right? So nested failures, draw that trend line, back up from there, or strong move down, right? 1 try up, 2 try, back up from there. We talked about this on the S&P, right? This is the same basic pattern as we look for overhead, right? 1, 2, back down again. In this case, we're going against momentum. So you're not just going to buy it, right? And you definitely don't want to try to pick a bottom on this because you know what's going to happen. The minute you try to buy that low is the minute this thing rolls over, stops you out, and then goes, see ya, sucker, right? And runs without you. Picking tops and bottoms is really, really difficult, especially if you're a short-term trader trying to use a small stop loss. So again, make sure they get down into this area. I'll be very specific on this. Make sure we take out these lows, get down into this 92, 67 area, right? Let those bears try once, right? Pull it back higher, draw that trend line, right? Let them try, oh, come on, Joe, get it together here, Joe, right? Let them try twice there. My drawing tool's a bit drunk here after a busy day in the office, right? 1 try, 2 try back up, right? And then again, there's that variable. If it snaps, right? 1, 2, there's that trap right below that low. Same basic pattern to be a buyer here. As we go lower, though, if the bears can hold that pullback and jump, if they can prove to us they're going to clear those lows here, now mark up that low, mark up that high, and get ready for that first short, right? First test is always the best test, right? Off of that 1, 2, 3 breakout into a hidden channel pullback. Now, where would the bears be hunting for next? Where's the next goal going next here? 35.68 is the next level going lower. So 35.68 if we get another bloodbath day tomorrow. Again, highly unlikely. Whenever you see a day like we see today or a day we saw on Monday, look what happened on Tuesday. Right? Look at Tuesday this week, and look back. That sideways chop, right? Sideways chop. That is what's likely coming tomorrow, unless something new comes out, right? Maybe some new news tomorrow morning, 8:30. We got some big news. Overnight ECB news. I doubt the ECB will shake it up that much, right? But there's always potential, right? Something big, drastic happens, right? All of a sudden, holy Christmas, right? Maybe a reversal, and again, a reversal would be a 1, 2, 3 reversal. Right? Hold the pullback, jump off, and make the move there and buy that low. Buyers want to go back up to retest the high. All right, we're looking pretty good here on oil. Expect a range tomorrow. Keep selling those highs. You can buy the lows. Just use those 2-try nested failure patterns. And again, if I'm speaking Greek right now or some language you don't understand, right, whatever language that is, make sure you grab the free trading course. Because you're going to learn all about our nested failures, our traps, our reversals, our breakouts. You'll learn all the details. That way you can make the most of our time together every evening on this video. All right, running late on time here right now. Thank you so much for sticking around. Really appreciate you guys tuning in here every night. And this is a big video here, and I know it's not for everybody. So thank you so much for tuning in and staying here to the end. How about some gold right now? Wrapping up on the gold. Now, what's interesting about gold is the definition of momentum is a problem, right? Gold is you can see it. Like I said earlier, gold is the definition of momentum is a problem, right? Because you can see this thing kind of whipping off that low. First of all, we know the market is bearish, right? What's the key takeaway on gold? We know we're bearish, right? 2 big legs down, right? Isn't it always frustrating at the end of the day? When a market is, I was talking about this to our traders in the trading this morning, when a market's just bleeding lower like this, you're trying to figure out what measured move it is. You know what I mean? You're trying to figure that out. Am I the only one? I know I'm not the only one, right? Maybe hashtag the only one in the comments section, but I know I'm not the only one that at the end of the day, you're like, are you serious? Really? This is it right there? That's the measured move of the day. What happens when you get these big bloodbaths moves, these big bloodbath type of moves is, at first it's 3 legs down, then it's 4 legs down, then it's 5, and you're like, oh, come on, really? It's got to be 2 big legs now. What ends up happening is you get these 1, 2, 3, 4, pop, 1, 2, 3, 4. And what's up happening is it creates 2 big legs. Don't let it get too much under your skin. I always tell my clients on these bloodbath type of days, One measured move becomes two, becomes three, and then you got to group them all together, right, in these big ones. I kind of laughed though when I was putting this video together tonight, because I was like, it looks so easy, and you probably know what I'm talking about. It looks so easy finding the measured moves after the fact, but when it's collapsing like that, you go, okay, there's one, there's two, there's three. No. It's actually two big ones there. Anyways, if you get it, you get it, right? Hashtag the only one, right, in the comments section below. But very interesting how at the end of the day, these bloodbath moves, the measured move always looks so easy. Oh, that's where they were trying to go. Why didn't I just short the open and just take off for the rest of the day, right? If only it was that easy. If only we had more days like this. The reality is you're not going to get big bleeder days like this very often. We just happen to have it on Monday as well, when the new lockdowns, right, started to rumor around. Anyways, I'm getting off track here right now. Kind of a funny part of these very strong moves down like this. They look very good at the end of the day, don't they? Anyways, 1877.2. I want to point this out here because there you go. That's a big low. Right, so here we are, 1877.2. Now, gold is interesting because gold, at first glance, you really don't see the range until you see that 1877.2. And then you realize, oh, it is a range, right? Double bottom, double top, two tops, two bottoms, right? That is the range right there. So just to make a long story short, we're bearish. We're into a range. Even if we didn't have a range here on the chart right now, I would still be saying be ready for a range tomorrow, because again, anything that goes straight down like that, look at that pullback. There's zero pullbacks, right? So the market will have to catch its breath. And most likely, you've got sellers looking to short, right, all these pops. Now, this is where I think things get interesting. Because remember, we got the ECB announcement tomorrow, right? ECB coming out tomorrow. Again, it'll be around 8:15, 8:30 Eastern time. It'll be, middle, late afternoon for you guys, right, in Europe. The ECB announcement means gold is going to be most likely the most difficult market for us to trade tomorrow. Not a lot is different on this chart. I think the one thing that is most interesting about this chart is this trend line that barely gets above that range. Now, remind me again, guys. If I get a deep pullback here, right? What's the problem? The problem is what? Momentum. Right? That's the problem. The problem is momentum, right? If I get a shallow pullback, what's the problem? The problem is support. So how do we avoid selling at support? Because remember, it's a bear market into a range. What do? We sell at resistance levels above the range. So if I pop back up here and I pull back, can I get that short? Right? Because there's no worries about momentum right there, right? There's no problem with momentum on that one. What's the problem though? The problem is the range. The problem is that major support area. So how do we avoid selling too low? We use trap patterns, right? We wait for the price to pop up, right? We know it's a very shallow pullback. We let the buyers try once, we let them try twice, and we sell short, right, above that range. You can see an example right here, right? If they go up, they pull back, they try once, they come back, they try twice. Well, that little tiny swing above that high, that's all they're doing right there, right? They're entering on traps. That's all they're doing. They're trying to make sure they get in above that trading range. So again, shallow pullback becomes an issue on this because you've got that trend line, right? So shallow pullback, right? If we do see it, and I'll watch them, right? I'll watch for one, I'll watch for two, and if we get lucky and we get that little pop back up, right? That's a good looking short, right? Not a bad trade at all. So again, if it just kind of shallow pops up, right? That's a trap pattern waiting to happen. If we go sideways, right? And then we make a pop higher here, that I'm not so worried about, right? Buyer failure into maybe seller pullback combination, depending on how high, right, the market goes up, right? Buyer failure, sell into stops, right? Seller pullback before you get back down into that trading range. But again, just like we talked about earlier, if it really runs like this, you got to be careful, right? That's going to be where we really have the biggest trap, right? Waiting for tomorrow, right? For lack of a better word, right? The biggest trap here, right? Big strong move up. Buyers try once, buyers try twice. I've already talked about this pattern quite a bit already, right? There's a bunch of nuances, right? We go up, buyers try once, come back, right? Trap and go above that high, right? I won't bore you guys to break that down. Again, it's the same idea we've talked about here, right? Quite a bit today. If we do, and again, you can imagine already, if this thing really runs, right? There's very good potential for a short covering rally, but can I buy this thing right now? Not if you like the money in your account to get bigger, that's for sure, right? Not a very long-term reliable strategy to buy these big bear markets. But if I can get a strong pop up, right? If I can get a jump off the moving average and a jump higher here, not that high, Joe, right? There you go, right? And again, the first move higher doesn't need to be incredibly strong. It just needs to jump off the moving average, right? Show me you want it. Show me you can hold the pullback. Then we know we're bullish. Then I can mark the high, mark the low, right? I can buy. Again, first test is the best test there. Where would these buyers be trying to go? They're trying to go right back up where we had that gorgeous nested short, right? God, boy, wasn't that a perfect example last night? If you tuned in last night, that is exactly what, and again, if you watched last night's newsletter, we talked about this short on the gold last night, right? That right there, that is exactly the pattern that we're looking for if this thing really cooks going higher here. So if you're watching last night, we talked about the short off the high last night on the newsletter, and that's exactly what happened, right? And so that's kind of what you're looking for as we go higher there, unless of course they get that 1, 2, 3 reversal, mark the high, mark the low, buy that first test. Now, what if we go lower here? If we go lower and take out these lows, this is where that nested reversal comes in, right? 1 try for the bears, 2 try for the bears, draw that trend line up from there, right? Or it's a crown reversal, shallow pullback, trap low, right? That's a great setup as well, right? Comes over, bears try once, bears try twice. Remember, the range is a magnet. And also to remember, if you're trying to pick a bottom on this, they have to take out those lows, right? Got to get down to those lows and then begin the process, all right? We don't want to be trying to do that before they get the lows taken out. What if the mark keeps going lower, right? What if we get a strong move down, a pullback to the moving average, right? And we jump, right? What if we really jump off that moving average again and we get that 1, 2, 3 breakout? Where's our next level? 1851 change down there is our next big leg down there, right? So buyers would love to get this. I would love to get a new mouse right now. Buyers would love to get a pop, right, and hold the pullback for the reversal. Sellers, we're going to keep on trying to sell the high of this range. Stay out of the range. Buy low, sell high, focus on failures, and don't let momentum fool you. Right? Momentum is the big variable for tomorrow. And speaking of tomorrow, don't forget, right? Tomorrow morning, every morning, 8 o'clock Eastern time, we'll be in our trade room doing all this stuff together, right? It's so much easier to learn this stuff by doing it with me in real time as the candlesticks are forming on the chart. Again, as I mentioned earlier, I'll put all the important links you guys need in the description of this YouTube video. So grab that link, get registered. I want to see you tomorrow morning at the opening bell, that we don't miss tomorrow's great setups. If you have any questions, please don't be afraid to call the office. I'm always here, looking forward to helping out. If the phone isn't a good fit for you, right, check out the live support tool. And again, if you have any questions, drop those questions in the comment section below. Hit that thumbs up button for me. And I hope by now I've earned a subscribe. I hope you'll share this channel with some trading friends of yours as well, because there's enough good setups to go around for everybody here on this YouTube channel. So thank you guys so much for tuning in. How about those Dodgers? How about those Dodgers? Man, oh man, go Dodgers go. I got to admit, I was raised in New England. I'm not a native Angelino, right? But I'll tell you, it's tough to live. I've lived in LA for almost 15 years now. It's tough to live in this city and not bleed Dodger blue. So go Dodgers, and hope everybody enjoyed the game last night. Have a great rest of your day out there, right? Boy, those Tampa Bay Rays are pretty darn good, though. You got to really tip their hat to them. A small club that really, really did a lot of damage. Anyways, I'm getting too far ahead of myself. Have a great rest of your evening out there, guys. Don't forget to subscribe, and I'll see you guys next time. Adios, amigos. Bye-bye for now.